The answer to the title of the video is no. But if Elon Musk knew about the Elliott Wave Theory, it would probably be a resounding yes. What's going on, ladies and gentlemen? Welcome back to the Express Global channel. In today's video, we're going to be discussing why Dogecoin might be setting us up for another massive run in the coming months, despite all of the panic that is happening within the markets, and is based on probabilities and conviction set forth by a technical analysis strategy known as the Elliott Wave Theory. The theory helps suggest that the market prices move in predictable patterns or waves, as you can see here, via a series of 5s and 3s that is driven by collective investor psychology. Very simply put, it helps us predict future market movements based on those mentioned 5s and 3s, and each of those 5 and 3s also are created by 5s and 3s in itself and can be a repeated infinite fractal nature. If we take a look at Dogecoin's macro chart, just like we just saw for that basic 5-wave pattern, for those that are new, I believe that we're on a larger wave 4 cycle degree in the green, as you can see here, that could be potentially setting us up for the final 5th wave to the upside to help conclude the bull market, instead of seeing us going into lower levels. But in order to understand whether that wave 5 is going to be happening, is that we have to understand how a wave 4 even takes place in the first place. Wave 4s are considered corrective patterns just like wave 2s, and can be designed by various corrective patterns. And in this case, what we have here is known as a possible triangle pattern. The triangle is ultimately created by a series of 3s in itself and is denoted or labeled by a series of 3s as itself. And it is denoted by or labeled as an A, B, C, D, E to help terminate that wave 4. And then we're looking for a breakout for that move to the upside. So for those that are not versed in the Elliott Wave Theory, many of you probably already know the triangle pattern. Within the Elliott Wave Theory, it also uses those triangle patterns since it is a common occurrence within the markets. Remember that market psychology uses that within the Elliott Wave Theory as an observation, and we help label those triangles. So within the triangle, we have rules to obey by, and simply put, the triangle is considered of 3s or constructed of 3s within that A, B, C, D, E in its own right. Each subwave has to be created by zigzags and can have one allowance of a complex zigzag known as a WXY, double zigzag pattern. But for simplicity's sakes, we have achieved it by creating all simple zigzags. So our wave E has eventually resolved and terminated, and this wave 4 is now considered complete. So this multi-year correction, which is a very common characteristic of a wave 4 in a larger macro cycle degree, we also have a possible sideways structure being built here because our wave 2 was sharp in nature as well. This is known as an alternation, and if a wave 2 is sharper in nature, we can get a pretty good idea that our wave 4 is also going to be sideways in structure as a completion for this wave 4. So after this wave 4, like I have said, we're looking for a breakout, which we got, and we're now looking for 5 waves up into that 5th wave. So basically, we're right here. We're looking for another 5-wave move up for this wave 5, just like I have said, that we are creating these actionary waves as 1, 3, and 5. They're created by 5 waves in itself. And that wave 4, since it's now concluded, based on that triangle, we're looking for 5 waves up. So if we're seeing this possible breakout happening, and we got this breakout of this triangle, we do have 5 waves up for this primary wave 1, and we have to look for this 3-wave structure or some kind of 3-wave structure. Again, these are different corrective patterns. Wave 2s can be any corrective pattern other than a triangle, and we have a possible A, B, C, idealized as a simple structure, idealized zigzag. And we came down into very important Fibonacci levels of that 88.6%. We got saved there. We surpassed it by a wick, but we are being supported on that 88.6%. So there's no real coincidence happening here. Could it be a coincidence? Absolutely. But these markets play by these major golden Fibonacci levels of the 618 all the way up to that 88.6%. So we're getting a pretty good support within these levels, giving us a little bit more confidence that this wave 2 might be in. Again, now we're looking for a smaller degree 5-wave move up into that primary wave 3, looking for another possible assumed sideways structure wave 4, since wave 2 was pretty sharp in nature. Then we're looking for a 5th wave to the upside to help conclude that 5th wave. That'll help us also create a larger 1, 2, 3, 4, 5 to the upside. Very, very nice. And from these levels alone, we could be looking at a possible 10x continuation to the upside. It's not financial advice, but that is the prediction that is set forth by the Elliott Wave Theory. So again, ladies and gentlemen, to wrap everything up, we have a wave 4 possibly being concluded here as a triangle. We got an A, B, C from this bull market or bear market alone. We thought this was going to be the conclusion of the bear market where wave 4 was originally labeled here. But since we got a very nice sideways structure, we're looking for a termination of wave 4 here. This breakout alone into a primary wave 1, 2, and then now 3, 4, 5 is to be expected based on that pattern alone. Hopefully that was helpful, ladies and gentlemen. Thank you very much for joining me. If you have any further questions, please put it in the comments below. If you have any other suggestions for other altcoins to dissect, also please write down which altcoin that you're looking at within this possible bull market continuation. But for now, I believe that Dogecoin has a very good possibility to the upside. Thank you very much. I'll see you guys in the next video. Bye-bye.